Okay, welcome to the Swing Trading with Cycles channel. It is December 15th. So the market is melting down right now. That's important, just context. This is the day after the FOMC meeting, the last FOMC meeting of 2022, the one for December. We all needed to get this data point out of the way. Now it's out of the way. The news isn't great. We're going to do an update on natural gas today. Interesting, this one is actually up while everything else is down, which that's telling you a lot. Although the last 3 or 4 days have just been straight up consolidation. We'll talk about that. I mean, very complex stuff here, but very exciting. It's resolving to the upside. It's bullish. And that's why you want to make sure that you're looking at all the angles. So as we talked about, right, like this is our daily cycle low here on day 30. So you had this cycle that ran 22 days, 22-day rally, and then decline into a day 30 low. And we kind of topped out here on day 5. So this is day 1, 2, 3, 4, 5. This, I'll zoom in here. This candle here kind of topped out, right, at the time. So just to take a step back, this candle, we gapped up on a Monday, gapped up 10%, and then just came all the way down, almost filled the gap. Just to be clear, this was the gap, right? Like, and we opened there. Like, just to be, like, that's where your gap was, more or less, right? Like, because that's the, right? So you can see the candle that day almost lost all of that gain, but didn't quite lose it. And then the next day we were green, and then look at that. We actually made a slight higher high above this day. So you're like, okay, we're back in business. We're going to make higher highs. And then the next day we come down and we make a lower low. So, like, this is just 3 days of crazy chop. And then you have today, which is Thursday, so just we still have one more day left in the week. So today we actually don't make a lower low. If you notice the details, we open inside the range of this candle, of the Wednesday candle. But now we've made a higher high. It's about 2:30, so a couple of hours, the market will be closed. But who knows? Maybe tomorrow we come in and we get a red day, and this is just another day of consolidation. What you will say though is that, I should say, is the gap has been filled. You can see the gap. We made that lower low on this day and kind of filled the gap. And so this suggests to me that we are moving, and this is day 7 of the daily cycle. So far, the high has been on day 5. And so the presumption is we're going to come back and try to challenge this high. And what is that level? And again, this is the futures. This is at $7.10, thereabouts, right? And I would assume we're going to go on and make a higher high and continue the daily cycle rally. Like, again, notice this daily cycle rallied for 22 days, right? Now, this bearish cycle only rallied for 5 days. So you can get a really bullish outcome or a really bearish one. And in this case, especially, again, considering the market is absolutely melting down because of the hawkish Fed statements, this thing is still up. Capital is flowing here. That's important to know about. So that's all the daily chart. What does the weekly look like? And so the weekly cycle looked a little bit squirrely. Like, okay, so we have this cycle here that rose for 7 weeks and then declined for, what is that, 9 weeks to a week 16 low. And so, and that's the read, right? And then you say, okay, well, this is a new cycle, right? So this is week 1. This is we'll zoom in here, right? This is week 1. This is week 2, week 3, week 4, which is our top so far. And then you get this bearish week. It's red, but it doesn't actually make a new low. Notice it's inside. These details are important. Notice, like, we didn't break the range of this candle. So, like, we didn't make a higher high, didn't make a lower low. And then we made that lower low the following week. At one point, this candle was very red. We know that because it opened, right? Just to be clear, it opened here. And at one point, it was all the way down here, right? At one point, this was all red body. But then we recovered, made a little bullish little hammer. And when things happen really does matter, because that Monday when we gapped up, that was a gap up on the weekly chart as well, right? Because it happened on a Monday, or really a Sunday night, excuse me. And so we then fill the gap. Now you can see, remember that gap fill that we talked about on the weekly chart, or excuse me, on the daily chart? That all just becomes a wick here, right? So this kind of simplifies it when you look at it on this multiple time frames basis. So that's a good way to think about that multiple time frame analysis. All that action on the daily chart ends up becoming a wick on the weekly, right? And so your important question here is this week 7 and this was some kind of like what is this, right? Like, this is, well, so clearly this is a swing low. Let's just be clear, right? Like, this week this hammer became a swing low with that gap up. Now, it has to hold that now, right? It would need to hold that like next week, etc. But once this candle went above this candle's high, this is now a swing low, but it's at an awkward time. It's like week 6, or is and that's the thing about this, like especially energy has these weird, very irregular cycles. So is it really that this whole thing is one cycle, right? And this is your low, and it's really a higher low, and we're just going to move higher? Because the reason why you try to figure out where you are in the cycle is it gives you an estimate of how much longer you might have to rally. But as I always say, price action is more important than cycle counts, and so we're going to have to watch this right now. I mean, taking out all, like filling this gap here, leaving that behind, seems to me like it's actually quite bullish, that this leaves a kind of like an air pocket, in sort of a good way, right? So we'll see. And what does that mean for the monthly chart, right? Because we have this idea that commodities are in long-term cycle decline, natural gas being one of them, and more importantly, as I mentioned in previous videos, you've had this massive run up for 26 months, right? We topped out on month 26, which was August, and so the presumption is that this is your long-term cycle decline. So now, is this over already? I mean, and the low actually happened in October. So that low is $4.75. Now, so far, this monthly candle is not red yet, or excuse me, green. The candle opened at 696, 697, thereabouts. So we got to get above that to go green, and that's going to be your first signal. We already made a lower low for the month, right? We went below November's low, so that's your false breakdown. That's the same kind of idea of filling that gap to some degree, right? You're kind of took out these stops, and now you have people chasing. That's why you have this kind of move up here. So looking to get above that $7 level is your next real, or thereabouts, right? To get this monthly candle back green. And then maybe you have some kind of chance that like this little pullback is something that's like this, right? That's going to resolve to another high, or like even like this. Now, again, this happened obviously very soon after this low. So this is the kind of thing, it's an important concept. It's like if it happens really early in the cycle, then it's almost more forgiving, right? It's like more likely that you're going to still resolve higher, versus it happening later. It's more likely that you've kind of topped out and you're kind of rolling over into that low. But again, the low doesn't always have to be very severe. It can be mild. That may be what we're getting here. We're going to have to watch for that. But the levels are very clear. Got to get above that $7 level. And then we got to make a higher high on the monthly. That's what this line is here. We got to get above, because this candle, this November candle, has a range of $5.60 on the low end, $7.60 on the high end. So we've got to get above $7.60 to get outside of the range of this candle. And then we're up here, and we have to kind of contend with all these wicks. Like that's a lot of selling that happened up here around these levels. So that's going to be important. But 7 and then 760 is really what we need to kind of get through in the near term. So that is the outlook. And if we think about where that puts us, if we kind of zoom out to like a yearly chart, you can see this is all just wick in a big green year, which is like pretty bullish on the whole, right? And you can see this thing, it tends to leave behind these big wicks, but it also gives you some uncertainty until you're kind of out of this wick, that you're making true new sort of all-time highs, because ultimately this is all still a downtrend from 2005 thereabouts. That said, if you do get to break out above, man, watch out, right? Like that's the double-edged sword of it, which is why it's good to look at both these really big patterns, but also look at the micro. And as we started with that daily chart, we've got to get through this level here, and right, you can see it's pulling back here, this upper wick on day 7. We've got to get through that zone here, and then essentially this is a big powerful bull flag that could propel it much higher. So we'll be watching closely. We'll be giving updates on this channel. Thanks for watching.